Most traders don't fail because they pick a bad strategy. They fail because they're chasing everyone else's strategy. If you've ever wondered, should I be trading what Akil is trading, or am I doing something wrong because this doesn't fit me, then this episode is for you. Today, we're going to talk about why focus beats perfection, why copying the best trader can actually hold you back, and how real progress in trading starts with something that most people skip completely, and that is self-understanding. Because before you can become great in the markets, you have to become great at understanding yourself. Hey guys, Akil here. Welcome back to another episode of the Trading Coach Podcast, a video episode. So head over to the Spotify or the YouTube to check it out. Today's episode was inspired by two conversations that actually fit really, really well together. The first one comes from a comment that I received under Trading Coach Podcast episode 1265. That was the episode where I talked a little bit about my origins into non-traditional investing and how to play the stock market and the whole U.S. Supreme Court versus President Trump situation. After that episode, a few traders reached out and said something along the lines of, Akil, I didn't really understand your backstory. I thought you were a Forex trader forever. Do you ever consider going back to the stock market? The second bit of inspiration came from a conversation that I was having over on the Tier 1 trading platform with one of our members, right? We were working through the process of helping them choose a strategy. And long story short, this trader made the assumption that just because I don't trade a certain strategy, that it means that strategy is bad or it's not profitable or it doesn't work. And therefore, it would be a complete waste of time for them to invest any energy and effort in learning said strategy. And before we get too deep into the episode, I just want to touch on that topic real quick because I know it's something that a lot of you guys maybe feel in your own right. You can let me know. But understand this, right? There are hundreds, if not thousands, of successful trading strategies out there, right? There are some core key concepts that I believe every strategy must have. There are some core key concepts that I believe every successful trader must have. But in general, you can take one thing and tweak it and fit it to you, your style, your market, a million different ways. Therefore, if someone were to attempt to trade every single successful strategy out there, one, they would be dealing with nonstop conflicting signals, right? Because there's always a buying and a selling reason in the market. And two, you would probably have to clone yourself a couple times over in order to pay attention to all the signals that are happening, right? I remember when I first started, I was only trading a few strategies and trying to do it on like 20 pairs, and I got overwhelmed and my brain exploded. I remember as a day trader, I tried to watch 8 markets on the lower time frames at the same time, trading a few strategies, and my brain exploded. You see what I'm getting at? You try to do everything, brain will explode. With that being said, I'm sure your broker would be really, really happy as they would be getting paid off all the frequency that you give them. But as a trader, disaster, brain explode. Brr. Anyway, so these two conversations got me thinking about something that I believe doesn't get spoken about enough in this industry, especially underneath all the shiny thing, syndrome, magic, strategy, Lambo, tiger chain thing that people are doing out there to sell you whatever they're trying to sell you. I don't even know what they're selling anymore, but I'm hearing they're still selling stuff. But this thing is going to be the importance of narrowing your focus. So if your focus is here, going like this, narrowing your focus, and it's going to sound weird, avoiding perfectionism, right? You don't need to be perfect, nor should you strive that to be perfect. And once again, as I mentioned earlier, truly understanding yourself as a person and more so as a trader. And I'll repeat that quote that I said earlier in the podcast that came from Dr. Brett Steenbarger, by the way, and I hope I'm saying it correctly. I'm probably butchering it. But before you can achieve any degree of greatness, you have to become great at self-understanding. That is powerful, and that's what this episode is centered around. So let's kick off this thing with the idea of we are what we focus on, right? For you guys that are into like health and fitness, you often hear like we are what we eat, right? Meaning that if we eat healthy, then our body will be healthy. Well, it's the same thing for our mentals. If we spend all of our time comparing ourselves to other people who are better looking, who are more successful, who are further along the path than we are, we're never going to be satisfied with our own lives, right? This is one of the reasons that social media is toxic. Social media can be great, don't get me wrong, but if you use it in a toxic way, it just takes you down this comparison path. And this path leads to a mindset full of frustration, depression, anxiety, and honestly, just like feeling miserable about yourself because everyone is here and you are here, and that just never feels good. More importantly, that feeling stays with you because no matter what you do in your personal life or personal career, there's always going to be someone ahead of you. So you're always chasing this carrot that doesn't actually exist, always comparing yourself and always feeling like a loser. On the flip side, old school reference for you. My wife would be happy about that. She loves when I do like 90s references. On the flip side, when we accept who we are, when we accept our qualities and we genuinely appreciate them, right? We're happy with them. We put ourselves in position to actually maximize what we have and maximize the person that we are. And we see the same thing in trading as well. Not a trading example, but I'll give you a track and field example because I am a track coach and I see this all the time, right? So as a track coach, I work with athletes of all different shapes, sizes, abilities. And every now or then, I'll have kind of one of the smaller girls, the more petite girls, compare themselves to one of the taller girls. So like this year on our team, we have a girl that is like 5 foot, and we have a girl that is like 6 foot, and they do the same event. And sometimes you get the smaller girl looking at the bigger girl and being like, man, she made that look so easy. She's just running and hurdling so gracefully, while I have to do all this work because I have smaller legs, which means I need to take more steps, which means I need to exert more energy and put in more effort to do what she's doing, and she's just like jogging in the park. And my response is always the same. I say, hey, look, I know I'm a good coach. I am good at programming. I can put you in the position to succeed and get better, but the one thing I can't do is I can't take you from 5 feet and make you 6 feet tall. That is impossible. So instead of kind of dreaming and wishing that I can be like her, because you can't, rather, let's focus on maximizing your skill set because there are things that you can do being on the shorter side and being more explosive that she can't do. So instead of trying to chase the impossible, let's figure out how to maximize your quality, and that's how we can gain an advantage and ultimately max out your talent. And when we shift our mindset from doing that versus the comparison, what we're doing is we're putting ourselves in a position where we can optimize our development. So you see, it's important to make that mindset shift from comparison to focusedness, I guess is the word. That way we put ourselves in the position of focusing on optimizing and maximizing our abilities, whether that's track and field or whether that's going back into trading or anything in life, to be honest with you. Now, as mentioned earlier, another problem or a trap that traders fall into is perfectionism. I keep saying trading because this is the Trading Coach podcast, but this is relevant in any aspect of your life. But perfectionism, right? We often think the goal is to be perfect. And when perfection becomes our goal, our attention naturally goes to everything that we did wrong instead of doing right? We see perfect as being this level up here. We can be right here, and instead of being, no, I got a better example, right? So let's say we're taking a test, right? A perfect score would be 100 on the test. Let's say we get a 90, meaning we got 9 out of 10 questions right on that test. Instead of celebrating the 9 questions we got right on the test, like, wow, I got 9 out of 10, that's pretty cool, right? We dread over the one question that we got wrong, and we beat ourselves. Oh, stupid, how did I get that question wrong, right? Because we're shooting for perfectionism. Now, obviously, with a test, it's a little bit different because it's easier to get 100%. In real life, there are certain things that we would just never ever be able to achieve for one reason or another. And to loosely quote Dr. Brett Steenbarger one more time, I remember somewhere, maybe The Daily Trading Coach, which is another great book, him saying, perfectionism is the destroyer of trading psychology. And to go back to that original quote once again, to be a great trader, we have to be great at self-understanding. And self-understanding means accepting the fact that we are not going to be perfect. It doesn't mean we can't try to be better, right? Kaizen philosophy, 1% change, 1 degree shift, whatever you want to call it. But perfect shouldn't be the goal, especially in an industry like trading where there's no such thing as perfection when it comes to the results side of things. So with that being said, we're going to do a Trading Coach podcast first. I am going to give you some homework. So listen up. I want you to start writing down some questions about yourself as a trader. And again, just don't listen to this if you are truly serious about making a change as a trader. Actually do this, right? If you don't do it and you see that nothing changes, you should look back and be like, oh, well, I didn't do the work, therefore I didn't get the result. So actually write this stuff down. Also, depending on what position or level or part you're at in your trading journey, you should answer the questions if you're able to, of course. Everyone's a little bit different, but if you are able to have answers to that question, make sure you answer them as well. All right, so here are some questions to get you started. And again, you can feel free to add different ones. These are just some ideas. If you guys have any other ideas, meaning things that I left out, type them in that comment section below. That way our other traders can read them. That way I can read them and I can get some more ideas and just share the wealth of knowledge that we're doing here. So question number 1. Am I an investor or a trader? Again, there is a big difference between an investor and a trader. To simplify things, investors are more longer term, traders are more shorter term, meaning investors are looking to buy and hold, or looking to value a certain asset and invest in it, either all at once or over time for the long run. Traders, we're more like mercenaries. We want to find something. We want to establish a directional bias. We want to get involved in that directional bias, and then we want to get out once we make the money, baby. Now, me personally speaking, my approach for investing and trading are different as well. So in trading, I am a chartist. I believe in technical analysis. All of my decisions in the market are based off of technical analysis, meaning the signals and the signs and the patterns that I see on the chart. With that being said, if I want to get a little fancy, right, I can add my fundamental bias to that technical analysis to shoot for those home run trades. Investing is a different story, right? Investing, I am fundamental first. So I'm looking for fundamental reasons, either stuff that's happening in the world or with the specific stock, to value it, meaning I value it from a fundamental perspective. Then I'm using the technical to help with the specifics. So what is a good price? Where do I want to get involved? Where should I take some out? Where should I add more on? So it's a little bit of a flip-flop with the two, which is why it's important to me to kind of define what I am. Number 2, if I am a trader, let's work on that assumption. What time frames do I want to trade, right? Do I want to be a higher time frame trader? Do I want to be someone that trades the daily, where I can live my life and do all types of cool stuff, come back for 5 minutes a day, look at the daily charts, get one signal, and then boof, go on my way again? Do I want to be a day trader? Do I want to be on the lower time frames, right? I've been speaking with a trader who is he's working on a strategy on the minute chart, and I am highly against the minute chart, but I am also a believer of, hey, I will give my opinion, but at some point you got to figure it out. So I've been kind of giving him a few warnings about what to expect on the minute chart. But do you want to be someone that trades that minute chart and has a lot of action, and you're glued in front of the computer for 2, 3 hours, 4 hours a day, right, looking for signals? Or do you want to lie anywhere in between, right? Me personally, I'm an intermediate swing trader. So the daily is my higher time frame analysis. The majority of my, or all of my trading opportunities come off the 4 hour or the 1 hour. So I have to pay the markets some attention, but not like strict, locked in, focused attention. I just got to be able to kind of go back and forth and look at things when we're at important levels. Speaking of levels, got a euro-dollar trade that I'm tracking. I'll look at it when I'm done this podcast, but I got to remember to do that. Anyway, number 3, what markets do I want to trade? Do you want to be commodities? Do you want to be in the stock market? Do you want to trade indices? Do you want to trade crypto? Do you want to trade Forex, right? And even within those sectors, like let's take Forex, for example, out of all the Forex pairs, how many do I want to focus on, and which specific pairs do I want to focus on? Now, this answer can and probably will change and should change based off of your back testing results, but in general, these are questions that you should be asking. What market or markets do I want to focus on? What am I best at? Now, while we're on the subject of back testing, a few days ago, my good friend and my business partner, Jason Greystone, just put out an amazing video over on YouTube titled How to Backtest Trading Strategies the Professional Way. It's about an hour and 20-minute video. And if you're ever curious or had any questions about what is backtesting and what all goes into backtesting and what the backtesting process looks like, I highly recommend checking out this video. I'll put a little video clip link at the end of this YouTube video. I'll put a link in the description box below, but this is a must watch and a must take notes on type of video. All right, let's hop back into the podcast. One of the reasons that I chose Forex, aside from the initial get rich quickness stuff, right, or make more money with less money, was that I discovered about myself that I am more of a counter trend trader. I'm not a buy and hold forever type of person. I am an impatient get in. I'm very patient, but I'm an impatient as far as like I want to get in, I want to get out, I want to get my money, and I want to move on for the next opportunity. The less time I'm in a trade, the less psychological demons go into my brain. So one of the things that appealed to me about the Forex market is that the Forex market is a highly consolidative market. So if you think of like the stock market typically trending like 60, 70% of the time, and then consolidating like 30, 40% of the time, the Forex market is the exact opposite. It tends to consolidate like 70, 80% of the time, to be honest with you, and then trend 20% of the time. So if my trading style is one that trades the bounces off of support and resistance in those quick little moves such like that, then it just benefits me to be in a market where I'm going to have more of those opportunities versus going against the grain where I'm trying to be a counter trend trader in a highly directional like market. I'm picturing in my mind, I don't know if I can find like a thing of this, but I'm picturing in my mind like one of the firemen like firing those fire hoses, and I'm like trying to walk into it and just getting blasted back. Like that would be my counter trend approach in the stock market. The next one, and I kind of spoke on this earlier about my personal decision between trading and investing, but are you more of a fundamental or technical trader? And it is okay to be both. And if you are going to choose both, which one ranks higher than the other? So again, like I am comfortable saying I am a technical trader. I do take fundamental stuff, for lack of a better term, into account, but 95% of my analysis is based off the technicals that will always come before the fundamentals. So again, it is okay to do both, but just make sure you rank which one takes priority over the other if you are going to do both. Next question, am I more of a discretionary trader or a systems-based trader? I was having this conversation on the platform as we speak right now. Think about discretionary trading as traders where you're allowed to make choice, right? This is the art and science. So if you think of like discretionary as being art, systems-based as being science. Art allows you the freedom, and that's the big reason that traders like to do it, of interpretation. I mean, I can look at a chart, I can judge, is that a double bottom? Is that an impulse leg? Is that a directional move? Is that a pullback, right? I have the ability to use my mind and my interpretation to tell myself what I am seeing on the chart. Now, this is great because it allows for freedom, and we like freedom. Our ego likes freedom, but it takes a lot of training. The trader I was working with, talking to on the platform right now, we were talking about impulse legs for advanced pattern formations, and he was talking about, I've revisited them, I added some new rules, and I'm still not consistent with them. I'm seeing one thing one time, another thing another time. And I was telling him, when it comes to impulse legs or reading like extensions and retracements in the market, it's less about having strict rules. Again, you can have strict rules form. I'm not going to get into that because that's a whole nother episode. But it's more of the art, meaning you have to train your eyes to see what you need to see. This always reminds me of there was this great defensive end for mainly the Philadelphia Eagles, but the Green Bay Packers as well, named Reggie White. And and he just was. We could take Myles Garrett for you guys that are younger that know him. But anyway, he was really good with his moves, and he was unstoppable. And one day the coach said, "Hey, Reggie, I need you to explain to these youngsters, these rookies, how you do that unstoppable move." And he's like, "Okay, well, all right, well, I kind of, I start." And he was like, I can't really explain it. I just kind of do it. I kind of feel it. You see a lot of superstars with that, that do that. Michael Jordan, for example, I'm sure he doesn't think about how he's going to cross someone over and spin and fake and fade away. I'm sure Ronaldo doesn't think about how many step overs he's going to do. It's an art. It just kind of just like happens in real time. And trading is very similar. We can't really explain every single thing on the discretionary side of trading, but when we see it, we see it. On the other hand, system-based trading, those are going to be the more mechanical traders, where it's like, hey, I'm using something that is completely binary. Maybe it's an indicator, maybe it's something that's automated and coded, but it's black or white. Like, I don't have a decision to make. I follow this. Now, the way we teach things at Tier 1 Trading is we call it rules-based discretionary trading. So we want to put systems into our discretionary trading. So think about it as being like a border, right? So I have a border of trading rules, right? So I can't act outside this border of rules. I have to follow them. I cannot take a trade unless this, and this. I cannot take a trade unless that, and that. But within that border, we do have freedom. So I have the freedom of interpretation within that border of rules. By the way, if you're ever interested in learning with us at Tier 1 Trading, head over to our website, www.tier1trading.com. I recommend the 14-day risk-free trial. Gets you on the platform, gets you in our live sessions, gets you some courses, and more importantly, it gets you access to our community that you can talk to and brainstorm with and get a real feel for what we have to offer. It's also not any type of sneaky scam, so after 14 days, your membership is just canceled and there's no auto bill or anything like that. Trying to do a better job of promoting that because a lot of you guys are asking, Akil, where can we go to learn from you? And I realized that I never actually tell you guys. So boom, there you have it. So anyway, you got to decide, do you want to be discretionary? Do you want to be systems-based? Where do you fall in that type of category? Next question, am I aggressive or conservative? This has nothing to do with how hard you punch your computer screen when you lose a trade. This is more so about your entry approach to a market. Again, we have our ability to be discretionary traders. We have our rules for how we can enter a trade. Are you going to be that trader that says, hey, I like this level, limit order at that level. I don't need no stinking confirmation. Let's go, right? Or are you going to be the trader that says, well, if price action comes to that level, I need every single clue imaginable before I can take a trade. And of course, there's everything in the middle. So where are you going to lie on that scale? Aggressive, conservative, aggressively conservative, conservatively aggressive, somewhere in the middle? Where are you at? Next, what do I want my strategy portfolio balance to be like? And this is a question that usually comes up when it's like, Akil, what's the next step in my trading after I have a solid trading strategy that I am trading consistently? And we often tell traders that there's two options, right? You can either trade multiple strategies, so lots of different strategies on a small grouping of pairs, or you can trade a single strategy on a large grouping of pairs, right? There was a trader that we work with named Tony, and he was known for only trading the beast, right? The pound yen, we call it the beast. I used to call it the graveyard. That's self-explanatory, or if not, I would put orders in and I'd wake up in the morning and my account would be buried. Yeah. But anyway, that was the only pair he traded. And whenever new traders would come onto the platform and ask him about it, it'd be like, yo, dude, like, how the hell are you profitable only trading one pair? Like, how do you get enough frequency? And the thing was, he traded multiple strategies on that one pair. So although he only focused on one pair, he could attack it 4, 5, 6 different ways. And the cool thing about that is that because it was one pair, he knew it like the back of his hand. The heck? Ew. Anyway, he knew it like the back of his hand. So it just made him even better because he really knew the personality of that pair. And if you think we're crazy, right? Different assets, different pairs, different markets, they do have personalities. It sounds weird if you are a newer trader, but trust me, certain pairs consolidate more, certain pairs trend more, certain pairs retrace to certain levels, certain pairs respect certain numbers, certain pairs react this way to news, certain pairs react that way to news. Like you don't know it until you actually see it, but those are just little clues that we can use to increase our edge as a trader. That's also the reason that many of my home run trades come on two specific pairs. Do you want to know it? Do you want to know it? Should I tease you? Should I tease you? Well, tune in to next episode of the Trading Coach Podcast where I reveal it. No. It's the dollar yen and the loonie, the dollar Canada, right? Those two pairs host the majority of my home run trades because those pairs are typically runners. Next up, what risk management / position sizing strategy or approach will I use? This has to do with your risk appetite. Are you a risky trader? Are you risking 10% per trade like a wild boy? Or are you very conservative, risking 0.5% per trade? Are you using a fixed pip position sizing strategy where you use a fixed pip amount per trade no matter what the stop loss is? Or do you use a fixed percentage, meaning every trade is going to be 1%? Do you use a money management technique or position sizing strategy, I should say, like a smooth ratio money management, or do you use nothing at all, right? These are some questions that you should ponder, or rather, a question that you need to ponder. And finally, probably the biggest one of them all, what specific strategy are you actually going to trade, strategy or strategies? And this is something that you'll know when it's time for you to know it. And once again, if you thought of anything that you should add to the list that I didn't mention, add it below. That way our traders can take a look at it and just become more knowledgeable, and it can help another trader out in their career. Now, answering these questions won't make you a master trader overnight, but it will clear up a massive amount of the confusion and give you a clear starting point and clear path throughout your journey instead of like wandering around the trading wilderness, lost and leaking money and confidence. as I work with more and more traders and I come up with more and more ideas on how to help people progress in their journey, it honestly makes me a little depressed. Like, man, I wish I would have known this when I was learning how to trade. Instead, I had to do it the hard way. But I guess that's the whole point, right? I learned lessons so you can help the next generation, and you learn lessons so that you can help the next generation, right? The whole pay it forward type of thing. But I spent a lot of time mindlessly wandering around said wilderness or the trading desert, right? Chasing one idea, chasing another idea, only to realize that most of them were mirages and not real. They were fake. I would get them and poof, they would disappear. Now, don't get me wrong. Again, I eventually got to where I needed to get to, and I'm grateful for learning all those lessons along the way. But to be honest with you, I could have saved a lot of time and, more importantly, thousands and thousands of dollars if I wouldn't have done so. So here's the final point I want to leave you with before this podcast becomes incredibly long, right? In general, we tend to be better at doing things that we actually enjoy doing. Seems like common sense, but a lot of us don't actually understand that. And when our trading style aligns with our personality, right, we naturally gravitate towards those things. And when our trading style naturally aligns with our personality and becomes enjoyable, we tend to put more effort forth with those things, and we tend to stick with those things during the rough periods a little bit longer. And don't get me wrong, yes, making of the money is the primary goal. Of course it is. I would be lying if it wasn't. But trust me when I say that money alone doesn't fill that entire motivational void, I guess you could say. Money doesn't get you through tough drawdowns. Money doesn't keep you focused during boring markets. Money doesn't push you to improve when things get hard or when things are getting easy and you feel kind of lackadaisical. After 20 years in the market of trading things that I enjoyed and trading things that I didn't enjoy just because I thought I can make money off of them, I can honestly tell you that there is a huge difference, and there is a reason that I became successful when I started trading strategies that I actually enjoy versus the strategies that I just thought would be a shortcut to the money. Once again, that enjoyment keeps you creative. That enjoyment keeps you motivated. It keeps you young. It keeps you engaged, and it keeps you wanting to commit to that process of growth instead of becoming stagnant. And I 100% agree with the idea of that enjoyment, that purpose, whatever you want to call it. That is the one thing that allows traders to not only survive, but thrive over the long run. And we know that's something that most traders don't do. So that's it for today's episode. I hope you guys enjoyed. Remember, if you want to learn how to trade, check us out, www.tier1trading.com. Also, follow, subscribe, like, do all the things that you need to do. That way you don't miss my next YouTube video or the next episode of the Trading Coach Podcast. I am hungry, going to feed the belly. I will see you.